Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar. Today we're talking about an interesting ETF product that has launched, which is the country's first EV ETF. It's a product of Mirae Asset Investment Managers, and it claims to be the country's first ETF product based on electric vehicles. Now, we're also going to be speaking to an analyst on this. Tarun Birani, founder and CEO of TBNG Capital Advisors, is joining us for his take on ETFs. But first, we're joined by Siddharth Srivastava, head of ETF products and fund managers at Mirae Asset Investment Managers. Siddharth, great to have you on the show. Welcome, and great to speak to you here. Now, the reason why we were interested in talking about your new ETF is because it's, like you say, unusual, right? The first one focused on electric vehicles. And when I saw that, the first thought that came to mind was, how big is this universe, or how much scope do you have to move around in terms of listed companies in the EV space, since it's still nascent and growing?
Okay, first of all, thank you, Tamanna, for having me here on the show. I think it's a very right question. We also have a global fund in electric vehicle space, and there globally we find a lot of companies which are pure play EV companies in battery space, in automobile manufacturing, etc. But in India, it's at a very nascent stage. If we look at four-wheelers, only 2% of vehicles sold in 2023 were EVs. In fact, if we add hybrid vehicles, then this number increased to just 11%. So there is a lot of space left. It's in a very early phase. If we look at overall two-wheeler, three-wheeler, and four-wheeler, the market share only stands at 8.5%. So EV is at a very nascent stage in India. But when it comes to thematic investing, the best thing to do in thematic investing is to invest in an early phase, so that you are able to sort of see the entire growth phase in a particular theme. And that is why we feel that right now, while the overall industry is at a nascent phase, it's an opportune time to launch an EV fund and perhaps look at the same fund from an investment point of view.
Coming back to my first question, Siddharth, what is going to be the universe of this? And we already have a nifty EV fund, which in all your communication, actually, you've put out and you've compared the returns with the Nifty 500, with the Nifty 50, and with the Nifty Auto. So the Nifty EV fund has done well in relative terms. It's been around since 2018. First 2 years was negative returns. Last year was about 43%. Is it the same universe as the Nifty EV? What does the universe look like, and how quickly does that change?
The idea here is to look at the entire ecosystem. So when it comes to thematic investing, you move across sectors and look at all the industries and stocks which are participating in a concerned theme. So when it comes to EV, it not just consists of automobile manufacturers and component providers, it also consists of chemical companies which are poising to provide chemicals for batteries. It consists of companies which have got PLI for battery manufacturing. It consists of IT companies which are building car connectivity and ADAS software. So you have a wider representation from specialty chemicals, companies like Reliance, which have got PLI, a lot of IT companies also, which are, as I mentioned, in car connectivity and ADAS system, software building, etc. So you have a wider approach. In the portfolio right now, there are 33 companies, and if I put a number to it, roughly around 25% weight is towards companies which are not from automobile and auto component segment. So it is a bit more diversified than a typical automobile centric portfolio, as it is obviously looking at a wider ecosystem, because 35 to 50% of a car cost in EV space is coming from battery itself. So if you want to participate in EV theme, you have to in fact look at entire ecosystem and not just automobile manufacturers.
All right, so that's interesting. You have a significant portion which is not autos, auto anks, but are in adjacent sort of spheres. One would assume tech, and tech which contributes to electric vehicles or, to that space. Are the returns going to be comparative to what the Nifty index has been, Siddharth? And I ask this from the point of view, and viewers watching this must be thinking that the auto ank story, the EV story has already run up a fair bit. So as a thematic play, how much more to go?
So again, a good question. So see, when it comes to thematic investing, it is obviously more risky than, let's say, a broad market investing in large cap or flexi cap, etc. So thematic investing is more risky, but it helps when a fund is more diversified. So for example, in this particular fund, the automobile manufacturers as a whole will only have 40% weight. Roughly around, as I mentioned, 25% weight is towards non-auto and non-auto component guys. Top stock is capped at 8%. So you have a bit more diversification, but there's no doubt that thematic investment is more risky. Having said that, we feel that while there has been a run up in auto, we see several auto companies doing fairly well in last 1 year. But EV as a theme is pretty new. There's a lot of room left for its adoption. For example, if I talk about pure EVs, roughly China car sales share is around 34%. If I'm looking at Europe, it roughly stands around 22%. And in India, pure play EVs are just 2%. So there's a lot of scope for growth. And secondly, it's not just car manufacturers. India does not have an ecosystem right now for battery manufacturing, and government is pushing through via PLI in this space. We have seen PLI 1 and PLI 2 in ACC battery space, looking for companies, inviting companies to build this ecosystem. If we look at government target also, government targets around 30% market share of EVs in passenger vehicle segment by 2030. So we are talking about a segment which is, we think, is a core focus area of the government, has a lot of legs left in order to grow in India. And India is pretty much as a nascent stage. While we are hearing about EVs in last 3-4 years, I think the growth journey will begin now.
All right, so interesting. The growth journey begins now, and of course, all mutual funds are from a longer term perspective. Tarun Birani is joining us. Tarun, great to have you on the show. And the reason we wanted you on this segment as well is to give us your perspective on ETFs and passive funds like these as an investment opportunity, especially when they're thematic in what is a niche area. What kind of an investor is this for?
Correct. So thank you, Tamanna, for having me here. And let me tell you that I may not be the expert in giving perspective of a specific fund, and neither I am allowed to talk about specific fund. But what I can talk about is more from a financial planning perspective, for an investor point of view, how opportunities like thematic and let's say sector specific opportunities should be looked at by investor. So I am a very strong advocate of building up your portfolio based on three approaches. One is safety approach, stability approach, and aspirational approach, right? So safety approach talks about your most important things in life should be taken care of. I think those are contingency requirement. Stability is all about something beating inflation is your target, and there your normal diversified funds can take care of the work. And from an aspirational point of view are more of the concentrated or the opportunities which are like which have high risk high reward things, right? So from a financial planning perspective, The aspirational block is something where I would recommend a strategy which can which are like more thematic in nature. So these are more tactical calls, right? Based on, let's say, investor understanding, and based on their financial goals, they should look at investing. So money which is required for someone's children's future, I may not look at a thematic fund or a sector fund, but let's say money which I know I've been taken care for my, say, financial freedom or children future, and I have other money which is available from a tactical investment, I may look at something like a thematic fund. Again, I believe most of the diversified funds have an option to pick up themes also in their portfolio. So what stops a fund manager not to pick up a specific funds or strategy in their diversified funds also? So I believe that too many funds in the portfolio again doesn't add up, right? Because themes keep coming, a lot of themes keep coming, but from an investor point of view, so many schemes in the portfolio just doesn't add up, right? And these are not very meaningful allocation. So that's why I am a very strong believer of diversified funds, and I will stick to that only on the portfolio.
Okay, so you are in for diversified funds, and this is perhaps for an investor who wants to take a little more risk. Would you agree with that assessment, Siddharth? Just keen to know what kind of investor is this for, and what should they keep in mind when looking at an EV ETF?
So basically, this product is not for core portfolio. Obviously, it is more so for satellite portfolio with a lower allocation. So obviously, when someone is looking for investment in themes, they should look for allocation of satellite portfolio, lower allocation, and again from a long-term point of view. See, it is very important when you're talking about a concerned theme to enter at a right point in time, right? You shouldn't invest in a theme when it is becoming mature, etc., because then the growth journey is already gone past. So if you believe that EV is one space which has a lot of room left to grow in India, which we believe so then you can look at this fund from an investment point of view. But having said that, themes come with higher risk. So please look at that. And also, this is more so for satellite allocation, where allocation should be on the lower side.
Okay, so that's important to keep in mind. But remember, it's great when you have different kind of options and opportunities in the market to play different themes, which is a safer bet for retail investors if they're not comfortable going out and making those investments themselves or managing their investments in a day-to-day way. So an ETF like this is definitely a great option. So thank you so much, Siddharth Srivastava, for joining us and talking about this first of its kind EV ETF. If you want to write into us and feature your question on the channel, then those are the numbers on the bottom of your screen. Meanwhile, let's start our first question with Qasim's query. He says, any mutual fund or ETFs that look promising from a medium to long-term perspective with focus on the semiconductor industry? Now, this is interesting considering we were just talking about a thematic ETF right before the break focusing on EVs, and Tarun Birani is with us for all your queries today. Tarun, you know, taking that forward, the fact is that investors are now looking for more opportunity, and that to ride on themes and technology-driven themes. Now, whether it's electric vehicles or in this case, Qasim, that is looking for options of how he can be a part of the boom in the semiconductor industry.
So again, taking no offense, I am a very strong believer of simplicity. Life is very simple, not to be complicated too much with too many things in the portfolio, because this is I have seen the typical investor behavior is more around FOMO, right? Fear of missing out. There are every moment new themes which keeps emerging and keep coming, right? But as an investor, I think how many themes I can participate to, right, from an overall opportunity point of view. So again, my strong advice would be to look at diversified funds and diversified strategy, because if the fund manager is convinced about the theme, they will anyway pick out onto it. But yes, if you have very strong belief on any specific theme, please go ahead and pick that, but that should be part of your very high risk reward thing. And tomorrow, let's say if this theme doesn't play out, you should be ready for that loss, right? Talking about this semiconductor industry, I don't think in India there are any specific themes available, but yes, outside India, in US, there are a lot of ETFs which are tracking semiconductor industry. So one can pick up those funds, and there are some feeders fund from India also which track these kind of ETFs. So which should be available, but one should be aware that taxation for all the feeder funds investing outside India is not favorable. So they will be taxed as a total income. So might not be the best idea.
Any specific funds that you can give him, because he's asked for a specific fund?
No, I'm not aware of any specific fund, Tamanna.
Okay, all right. Sachin is our next guest, age 46, and is writing in from Pune. He asks, is it advisable to invest in Nippon India Banking and Financial Services Fund? I'm looking to start an SIP. What would be your advice for Sachin?
So again, my strong advice to Sachin would be, if you have a strong view on banking, I think you should definitely look at in your tactical part of the portfolio. I can't talk specific about any fund, but yes, as a theme, banking and financial services is one theme in India. If India has to grow at 7-8% over a long period of time, banking and financial services is the one which is going to drive the entire economy, right? So there is a huge need of capital, and banks basically fund this capital. So banks, and largely I have seen most of the large private banks in last 3 to 4 years have not given very significant returns, maybe because of the merger issues, maybe issues of promoter holdings. There are many things which are playing out. So maybe I feel from a value perspective, this themes looks very interesting to me. But again, I strongly recommend to look at diversified funds where fund managers have already picked up banking and financial in the portfolio.
Okay. All right. So no specific fund advice there coming in. Masood has written to us. He's age 36 and is writing in from Kolkata. He's thinking of investing in the Tata Ethical Fund. Is it a good long-term bet? Tarun, what would you add to this? And tell us a little bit more about the Ethical Fund.
So this is an open-ended, again, the fund is more aligned from a Sharia principles, right? From a Sharia principles point of view. So I understand there are investors who are looking at strategies which are complied on a Sharia principles. So for those investors, this could be a option which could be available for investment. Yeah.
Okay. Are there enough options for people looking for funds which are in line with Sharia rules?
I think there are very limited options, and this is one of the options available. Very limited options in the Sharia space in India.
Okay. So obviously, if someone asks you that should I look at investing in it, if you have to for religious purposes, well then yes. What are the kind of returns that come in though?
Again, they are aligned with equity, so all the investment and the risk of equity will be available to this portfolio. And I don't, and companies which are actually looking at this should be participating in the equity growth which we are getting in our country. So I don't think from a return perspective there will be any problem in that. Yeah.
Okay, so no real issue there. Balbindan writes in, he's age 25 and from Pune, says, what's the view on the UTI Innovation Fund? Is it a good bet for a long term? Once again, there's someone looking for something different, Tarun. I know you keep telling our viewers, keep it simple, silly, stick to the basics, but people want to go out and experiment, because remember, this is an option they have instead of spending all of their time investing directly in equities. So tell us about the Innovation Fund.
So Tamanna, again, as TV commentator, as well as you as a report, I think journalist and I think it's our responsibility to tell that what is right? Not what people want, right? I think people may want 10 things, but I very strongly believe that all these names and all these things are some way to sell and market products, right? So which may or may not pan out to the best of the desired investment objective. So investors should focus more around their financial plan, their goals, and accordingly look at the specific funds.
So, Tarun, in your view, what is the ideal portfolio? What is the ideal portfolio for someone who wants steady, returns over time with not too much risk, but also does not want to miss out on these big themes and ideas?
Right. So I'm a very strong believer that one should look at first is your portfolio should participate in the market. So for that, two, three strong index ideas are very good things like large cap. You can pick up, say, Nifty tracking index. For mid cap, there are mid cap tracking index available. For a couple of alpha oriented strategies, one can look at one or two good flexi cap fund, and for small cap one can pick up one small cap. So what I believe in is 4 to 5 strategies in the portfolio, which is actually helping you participate in the every segment of the market. Again, selections of active fund manager should be based on the 5 P's, basically the process they follow, the pedigree, the parentage of the fund manager in terms of performance, long-term rolling return performances, every year returns, how they have generated. So I think these things help you bring a lot of conviction in the active guys. But I believe that not more than 5, 6 funds in the portfolio is required to achieve the desired result. What happens is people keep looking at many of these thematic opportunities which keep coming like NFOs every 6 months, every 1 month, 2 month, and investors get frenzy to keep adding small amounts in that. What happens is they keep adding up so many funds, 15, 20, 30 funds in the portfolio. Mutual fund in itself is a very diversified product. And if you add 15, 20, 30 funds in your portfolio, you are overlapping a lot of ideas in your portfolio. Like most of the funds will have common stocks. So the benefits of diversification actually doesn't come up. To just give you an idea that compounding of say 12% doubles your money in 6 years. 1 crore invested today in 12 years will become close to 4 crores if your money grows at 12%. And if your money grows at 15%, in 10 years your 1 crore will become 4 crore. So and if you've seen most of those diversified funds in last 5 years, 10 years, 15 years have achieved these kinds of returns. So simplicity is making a very strong case. That is what I am trying to mention. No need to have too many exotic funds in the portfolio. Keep it very simple.
Keep it very simple, and that really is the best way to go. Anuja Parashar is our next query, a viewer writing in who's 24 and wants long-term return. Says, I invest 18,500 per month in 9 funds and have an investment horizon of 26 years. Have I chosen the right funds, or did I diversify too much? Great question, Tarun, and in line with what you've been saying. Is, first of all, 9 funds too much?
Too much, too much. I would say he should try to bring it down not more than 4 funds in his SIP portfolio. There is no need to have 9 funds because they are not actually adding up. So no need to have so many funds because it will become
which from Anuja's portfolio would you prune out? So let's give her some information which is useful for her and specific. Which from her 9 funds would you prune?
So I cannot talk specific funds as a compliance thing, Tamanna. I'll not be able to talk, but what I can tell her is what ideal SIPs one she can build up. She can build up two strong indexes in the portfolio. One which is tracking Nifty 50, one which is tracking mid cap 150, and one small cap. I think these 3 indexes can do, I think, most of our jobs. So she don't need to have so many funds in the portfolio.
Okay, so keep it simple. Thank you. That's the theme of this afternoon. Tarun joining us there with his answers to all your queries. Thank you, Tarun. Great to have you on the show. We'll have to take a little break, but stay tuned. A lot more coming up on the other side on NDTV Profit.